What's up, crypto warriors? Welcome back to Boni's Life, where we turn market chaos into trading clarity and where your financial future gets the intellectual upgrade it deserves. I'm your host, and if you're new here, buckle up because we're about to dive deep into the most exciting 24 hours the crypto market has seen in weeks. Now, before we get started, let me ask you something. How many of you woke up this morning, checked your portfolio, and thought, is Bitcoin about to explode or am I about to get wrecked? Well, my friends, today we're going to answer that question with the precision of a Swiss watch and the confidence of a Wall Street titan. Because here's the thing about successful trading. It's not about hoping and praying to the crypto gods. It's about understanding the game better than everyone else in the room. Let's talk about what happened in the last 24 hours. Because if you blinked, you might have missed some absolutely crucial market movements. Bitcoin is currently trading at $113,999, down about 1.18% from yesterday, while Ethereum is sitting at $3,620, down a modest amount, 0.68%. Now, I know what some of you are thinking. Boni, those are red numbers. Should I be panicking? And my answer is simple. Absolutely not. In fact, these numbers tell a story that's far more bullish than you might think. Here's why I'm not losing sleep over these minor pullbacks. Bitcoin is still trading more than double its 52-week low of $52,598, and we're only about 7% away from the all-time high of $123,091. In traditional markets, that would be considered a healthy consolidation. In crypto, it's practically sideways action. But here's where it gets interesting. And this is where the smart money separates itself from the emotional traders. According to top analyst Michael van de Poppe, and I quote, "The markets are looking absolutely magnificent for a big bull run in the second half of this year for Bitcoin and altcoins." But here's the kicker. He's identified $116,800 as the critical resistance level that Bitcoin must break to go, and I love this term, explosive. Now, that's not just some random number he pulled out of thin air. This level represents a confluence of technical factors that have been building for weeks. Let me paint you a picture of what's really happening here. Bitcoin is currently retesting a major macro trend line that dates all the way back to 2017. Think about that for a moment. We're talking about a trend line that has been relevant for 8 years. For those of you who weren't around in 2017, that was when Bitcoin first captured mainstream attention, when your neighbor started asking you about cryptocurrency and when the first wave of institutional interest began. The technical picture is absolutely fascinating right now. We have primary support sitting rock solid between $110,000 and $112,000. This isn't just any support level. This is what analysts are calling a critical accumulation zone. And you know what that means? Smart money is buying. While retail traders are getting nervous about minor pullbacks, institutions are backing up the truck. The volume tells the real story here. We're seeing $57.12 billion in 24-hour trading volume for Bitcoin alone. That's not panic selling, folks. That's active participation. That's institutional money moving. That's the kind of volume that confirms momentum, not destroys it. Now let's talk about Ethereum because this is where things get really spicy. Ethereum rallied strongly in yesterday's session, up 4.30% at one point before settling back. The technical analysis shows what's called a golden cross pattern, which is trader speak for buckle up, we might be going to the moon. But more importantly, Ethereum has something Bitcoin doesn't have, utility that generates income. Here's where Ethereum gets really interesting from a fundamental perspective. While Bitcoin is purely a store of value play, Ethereum offers staking rewards of 3 to 4% annually. In a world where traditional savings accounts are paying virtually nothing, That's real money. But it gets better. Tom Lee from Fundstrat, who correctly predicted Ethereum would approach $4,000 by the end of July, is now saying Ethereum could hit $15,000 before the end of 2025. Lee's reasoning is brilliant, and this is where fundamental analysis becomes crucial for understanding where we're headed. More than half of all stablecoins are hosted on the Ethereum platform. Every time someone mints a new stablecoin, they need to deposit Ethereum. Lee calls this Ethereum's potential ChatGPT moment, a catalyst that could drive 300% upside. Think about that. We're not talking about speculation here. We're talking about utility-driven demand. The institutional adoption story for Ethereum is absolutely mind-blowing. Corporate treasuries now hold at least 966,304 Ethereum tokens worth nearly $3.5 billion. That's up from just under 116,000 at the end of 2024. We're talking about an 8-fold increase in corporate adoption in just 7 months. Companies like Bitcoin, which now holds over $3 billion in Ethereum, are essentially becoming the MicroStrategy of Ethereum. But let's zoom out and talk about the macro environment, because this is where the real magic happens. The Federal Reserve is now widely expected to cut interest rates in September, with a 92.2% probability according to market pricing. Why does this matter for crypto? Simple. When interest rates fall, investors search for yield. And guess what offers yield in the digital asset space? Ethereum staking. Here's something that might surprise you. The Fear and Greed Index has dropped from 78, extreme greed, to 50, neutral, over the past month, even as prices have remained relatively stable. Analyst Ali Martinez points out that historically, the best buying opportunities arise during periods of extreme fear. We're not there yet, but this cooling off euphoria is actually healthy. It means the hot money has been shaken out, setting the stage for a more sustainable rally. The institutional money flow is absolutely staggering. We're seeing record-breaking $11.2 billion in institutional inflows into digital assets, surpassing the December 2024 peak of $7.6 billion. This marks 15 straight weeks of inflows. 15 weeks? That's not a trend, that's a fundamental shift in how institutions view digital assets. The whale activity is equally impressive. Top-tier whales have added over $110 million in Ethereum and $60 million in XRP as institutional inflows surge. These aren't retail investors FOMOing into the market. These are sophisticated players with deep pockets making calculated bets on the future of digital finance. Now, let's get to what you really came here for, the trading strategy for the next 24 hours. This is where we separate the professionals from the amateurs, where we turn analysis into action, and where we potentially turn your portfolio green. For Bitcoin, here's your playbook. We're looking for a long entry above $116,800 with volume confirmation. This isn't a maybe level. This is the level that multiple analysts have identified as the key to unlocking explosive upward movement. Your stop loss should be below $112,000, which represents a failure of major support. Your first take profit target is $119,500, which represents a return to the previous trading range. Your second target is $122,000, which puts us back near all-time highs. Risk management is crucial here. You should never risk more than 2 to 3% of your portfolio on any single trade. The risk-reward ratio should be at minimum 1 to 2, meaning for every dollar you risk, you should be targeting at least $2 in profit. And please, for the love of all that is holy in crypto, watch for false breakouts. The market loves to fake out traders right at these critical levels. For Ethereum, your long entry signal is a break above $3,750 with RSI confirmation. Your stop loss should be below $3,400, which represents a breakdown of the pivot zone. Your first take profit is $4,000. That psychological resistance level that everyone's watching. Your second target is $4,500, which puts us halfway to the all-time high. But here's where Ethereum gets really interesting for long-term holders. Consider holding a portion of your Ethereum position for staking rewards at 3 to 4% annually, plus potential price appreciation. You're looking at an institutional-grade asset with utility value. This isn't just speculation. This is investing in the infrastructure of the future financial system. The timing factors for the next 24 hours are aligning beautifully. We have Fed rate cut expectations providing macro tailwinds. We have continued institutional buying pressure. We have technical breakout setups on both Bitcoin and Ethereum, and we have the stablecoin adoption momentum that could serve as Ethereum's catalyst. But let's not get ahead of ourselves. There are risk factors to consider. Profit-taking near resistance levels is natural and expected. Regulatory uncertainty around staking still exists. Macroeconomic data releases could provide volatility, and as Van der Poel mentioned, we could see a final sweep lower before the real rally begins. Here are the 5 technical triggers you need to watch in the next 24 hours. First, Bitcoin's $116,800 breakout. This is your key level for explosive movement. Second, Ethereum's 3,750 resistance. This is the gateway to the 4,000 target. Third, volume confirmation. Any breakout must be accompanied by increased volume. Fourth, RSI momentum. We need to see a transition from neutral to bullish. Fifth, the macro trendline hold. Bitcoin's 2017 trendline support is critical for the bullish thesis. Let me leave you with some wisdom from the smartest minds in crypto. Sam Tabar from Bit Digital says Ethereum balances growth potential with the legitimacy of a blue-chip asset. Anthony Georgiades from Innovating Capital puts it perfectly. Holding Ether is more like owning oil, whereas Bitcoin is more one-dimensional, like gold. And Paul Brody from EY believes we're seeing a fundamental shift toward Ethereum-based financial infrastructure. The prediction markets are backing up the technical analysis. There's a 66% chance that Ethereum sets a new record price in 2025, according to Myriad Platform. The charts say yes, the fundamentals say yes, and the smart money is positioning accordingly. Here's what I want you to do right now. First, if this analysis has been valuable, smash that like button and subscribe to Boni's Life for more market intelligence. Second, set your alerts for those key levels we discussed. Third, prepare your trading plan with proper risk management. And fourth, remember that successful trading is about patience, discipline, and following your plan. Drop a comment below and let me know. Are you Team Bitcoin Breakout or Team Ethereum Explosion? What's your trading plan for the next 24 hours? I read every comment, and your insights help make this community stronger. Remember, this is not financial advice. This is educational content designed to help you make informed decisions. Always do your own research. Never invest more than you can afford to lose. And remember that past performance doesn't guarantee future results. Tomorrow, we'll be diving deep into the altcoin opportunities that could explode if Bitcoin and Ethereum break their key levels. You won't want to miss it. Until then, keep your charts close, your risk management closer, and remember, in crypto, fortune favors the prepared mind. This is Boni's Life, and I'll see you in the next one.